All right, let's get to the stocks on our radar this week. We'll bring in our man Steve Broido in from the other side of the glass to hit you with a question. Jason Moser, you're up first. What are you looking at?
Sure. It's an MDP holding we have today, Boston Beer, ticker SAM. And I was reading this week a conference called the Meeting of the Malts. I just love that name. But Dick Yuengling, Jim Cook, and Ken Grossman, the founders of Yuengling Brewery, Boston Beer, and Sierra Nevada, were talking a lot about the saturation in the craft brew market today. And I think a lot of people aren't really taking a long enough view here in that a lot of these breweries are very small. They are not built to last. And the venture capital that's investing a lot of money in them, well, those funds have finite lives as well. At some point, they're going to be wanting to realize returns on those investments. Boston Beer has a very good competitive advantage, not only the brand, but the distribution and the production facilities it has today, not to mention a very smart leader in Jim Cook. So I think this is a business we plan on holding on for a long time in NDP.
Steve, question about Boston Beer?
Do you have a favorite bad beer? Boston Beer is a good one. Do you have a favorite bad one?
You're talking about just your regular old kind of a mass brew?
You bet.
You know, I was in the golf business a lifetime ago at Greenville, South Carolina. It was all about the silver bullet, Steve. Coors Light.
James Early, what are you looking at?
I'm going with a stock called Omnicom. This is an income investor recommendation, and this is a stock that I've tried hard to get people to love. It's just tough because it's sort of like steak at a seafood restaurant. It's a dividend stock, but it's an advertising company. It's a company that the TV show called Mad Men was based on. It has great margin, great profits, 40-something% return on equity. I'm looking at the numbers right now. 2.4% yield isn't huge. The stock is up 10% this year. I think it's an overlooked dividend stock just because it's in a weird industry.
And the ticker?
OMC.
Steve?
If I were a layperson, how would I begin to make sense of the advertising industry and what makes a good business in that space?
It's cyclical. Obviously, talent is what's useful, but this company has a bunch of different agencies, so they can serve competing businesses. So normally, if you're Coke and I'm Pepsi, we wouldn't go to the same agency because of conflict of interest. But if one parent company has many different sub-agencies, then they can do that. Omnicom does. That's part of their business model.
Ron Gross, what are you looking at?
Steve, I got to go back to Perry Ellis, which I know you know well. PERY. They are quietly becoming a stronger business under the radar as they execute on their strategic plan. They report fourth quarter results next week. Stock's currently trading at a PE of 10. It looks very undervalued.
Steve?
How does Perry Ellis get away from being the TJ Maxx brand that we have come to love?
I don't know if they need to necessarily get away from it. They just need to get the right merchandise at the right price points into the stores. And I think if they stick to their bread and butter, then sales will grow and profits along with them.
What do you like, Steve?
I'm going with Omnicon. Is that it, James?
It is, Steve. Thank you so much. I must have sold it well. Yeah.
Yes, I'm in.
All right, guys.
Awesome.
Thanks for being here.
Thanks, guys.
Thank you, Chris.